Hello, everybody. It is Friday. Happy Friday, November 15th, 2024. We made it. Big down day today in the markets. We will take a look at the charts. This RFK thing is really jolting a lot of the markets downward very aggressively in the biotech sector. Got creamed today. We were talking about it yesterday's video. Totally at the heart of the matter today. So biotech plunging 5% today, actually, with XLC. It's funny, I ended the video, I think, yesterday with XLC can't stop, won't stop. But I did say, obviously, expect reversals in the markets, at least some profit taking. Don't be surprised when we get those 2 to 3% drop days. This was one of them. The XLC, which is the Meta Google fund, and the Qs both dropping 2%. And you saw volatility climb actually today in a multiple sigma fashion, up 7%. And then one of my favorite things to do is recapping the whole week and the biggest 3 trades of the year. And we'll take a look at that. I'll tease you for the year. But this week really was all about Bitcoin soaring 19%. We'll look at the picture in a second. Actually, I'll just share it. And this day, or this week rather, really all about Bitcoin ripping 19% with big drops. Cascades in biotech down 12%. A lot of it was the latter half, the latter portion of the week. And the gold miner still not making any friends, down 9%. And here is your picture here. Yeah, it looks like this fellow's counting up his Bitcoin wealth, and it's 91K right now. It traded very well today. We'll look at all the charts that mattered today and this week. So let's get into it, starting with the big kahuna of it all, Spizzle, the S&P 500 through SPY. So let me get through to that on my screen. Boop. All right. So here is the trading. Interesting trading today, actually. So really, the bottom did not come until right around that 1:30 p.m. You can always kind of bank on a market bottoming there. We haven't had like something closing on the lows at 4 o'clock in quite a while. It was interesting price action today. We had a bottom at 1:30 p.m. here, and it was above average volume today, by the way. It was notable. SPY did, I think, over 60 million shares. It was, definitely above average. We hit a low at 1:30 p.m. here in terms of price at 584. I'm rounding. And then it's interesting. So VWAP, I always pay attention to it. The volume weighted average price, you should too, is that orange line. It was 585.80, and we actually closed above it towards the end of the day. You can see this big green bar here. A lot of buying towards the close. I think folks sniffed out that bottom was going to hold that 584 since it was there essentially from 1:30 to 2:30. We'll look at the Qs, not on an intraday basis, but on a longer-term chart. The Qs today was the brunt of the pain. So that was not a bad hold here from the SPY. And here, this black line is the 200 bar moving average. So still a little bit heavy over 594. I had said trees don't grow to the sky, and don't be shocked when you get a pullback. So here going forward, like I said, I'm not right all the time, obviously, and I'm going to own up to it. In a personal move, I will say I bought a significant amount of mega cap tech today. It got the pullback through the ticker I'm talking about is XLG. I love it. I addictively buy it. And I got the pullback I wanted. It was a pullback to the 21-day exponential moving average. And I believe I'm already up on that position today, albeit small. So today was a great day to buy. All that being said, as I said before, my target for the accumulation end date was mid next week, right around Wednesday, and my target was right around 595 to 600. Now what are we going to do in 3 days time? Did we top out? Do want to say all along, do you pull things forward, right? So my target was 595 to 600. We actually hit 4 days ago 600 on the button. So sometimes it does happen if you hit that early, as if you were, you did extra couple of reps, and you're going to take a little bit of a longer water break. At least I know I do. So now we pulled back to the 20-day, 21-day exponential moving average in SPY, as I see here, 586. So I don't think your risk to reward is terrible here. I think, like I said, I personally bought today. The other thing I bought 2 days ago was uranium. So definitely did do some buying here. I'm not, significantly lading up. All that being said, the downside here, I think if this continues, so I can see how the charts look on the weekend. I'm going to do a little more work on that, but still think you might get a little bit of a pop here to 593 or so on Monday, Tuesday. I don't think this is potentially over. We'll see. And then future, into basically right around Thanksgiving time, a sell-off to 585 to the 570 region. So again, when you say that 570, it seems, the market's in question. Look at some of the leadership that's changing. But 570 is levels that we just reached for the first time in human history, September 19th. So when you're not even at 2-month lows, the Crimea River, we're gonna buy that up. I'm gonna stand long. But we will look at some of the leadership that is changing under the hood because I think it is significant. Okay. All right, so let's take a look at the movers. Big stuff here that happened. So to the upside, there were only really 3 areas, and some of them are, inverse, as it were. So volatility jumped in multiple sigma fashion, up 7%, 6.67 here, so 6 2/3. We'll take a look. So basically opposite of what I just said about the market. I thought this was going to continue to go lower, inverse of what that accumulation date was for SPY on November 20th. So I basically mean that VXX should be in its distribution phase ending on the 20th. My target for that was around 45. So again, when we made those highs here and the S&P on the 11th, this went as low as $44. So I think I actually talked about it 3 days ago and said this is a little bit overdone. I could see it definitely popping. So we'll see if this reverts or moves lower towards that 45 area again. I think it's definitely possible. And then over the next 2 to 3 weeks, I do see this bouncing to 49. Its 200-day moving average, so is 51. So I still think that'll be heavy. I don't think it makes that kind of a run. A big move up today, though, up 7%. So that's my call on volatility. Where did that other doc go? All right, here we go. It's been a long day. Utilities, one of the other areas that was up. This was a big mover along with volatility, so very defensive day. And utilities closed up 1.5%. So a big move for that, multiple sigma fashion. This group has, kind of been out of favor since mid-October when it peaked at 82.5. Now we're at 79. I like this group for the next 2 weeks or so. I think it's kind of a perfect trade. I might actually put this on. I don't typically buy utilities. It's hard to get S&P exposure. So you kind of have to buy the XLU. There's not a lot of constituents that you can buy outright. So I like this one. I might look at this for Monday because my target on this is I think if it gets exuberant, I think you get to $83. So today it turned up $1. That's pretty good. So I'm going to write buy XLU or take a closer look at XLU on Monday. I like it, though. I think it could be a perfect hedge going into the next, 2 weeks. And like I said, this is going to base around here about 79. And I do think it'll bounce to $82 to $83, which would be right around there. It's funny. The 52-week high is 82.5. So right around there. Not sure if it does it, but I do think it makes a run for that. So there you go. Trade idea. And the next area that was up, we've been singing about it all day or all week rather, and it continues. IBIT, monster day, up 4.5%. Interesting candle here on the 13th when it peaked at 53.25, let's call it, closing the lower portion of the day's trading. And then today, this is a nice looking candle here. This is called a hammer. So you can see it traded all the way down to this point, being 49.94, and then it opened here at 51.02 and ended up closing at 51.94. So definitely a great sign of strength in terms of, my target on IBIT for the next 2 to 3 weeks. Similar to what we just said about the market, when it hits 600 and then we'll see what happens. I think get ready. I'm very curious to see how it trades this weekend. I wouldn't be good looking candle today, but this is kind of at full value. My target for this was about 46 to 47. So this is done a lot in just a little bit of time. So I think this can possibly in a scare if you do get selling from the market and folks obviously, maybe sell the latest comer to the party. This could go down to 43 over the next month, which would be from 52 to 43 would be a $9 reduction. So it'd be pretty significant sell off. So we'll see. But this has done a lot of heavy lifting in a short amount of time. So could have another. I'm curious how it looks for the weekend. I don't think it's going to be superbly bullish, but we'll see. Famous last words. But I do see this more so going down than up in the next couple of weeks. All right. I think those were the only areas that jumped up today. Yeah, volatility, utilities, and Bitcoin. If you were in those, that was the upside. Now let's look at what commanded a lot of the attention today. And these were to the downside movers. And we're going to look at Biotech that got creamed, down 5 1/3%. Ugly looking bar. They have been exiting this space since the 11th. I think is when RFK was rumored to be treasury, not treasury, healthcare czar, whatever the term is now, healthcare secretary, I don't know. So hit 105 on the 11th, and wow, they say from false moves come fast moves, and this was at 103 half to 104, contending with this area. And they tried doing it. We talked about it. There's no real things as triple tops. You thought it was going to really catapult through it, like you're trying to kick a door down. It did it in February here. It did it in July. Did it again in September. And then we thought it pierced through on the 11th. It got all the way to 105. And this thing's under the 200-day moving average now for the first time since April. So definitely not looking good in the biotech land. A lot of it is because of Kennedy. I own a biotech, and everything like in the space was down today, regardless of it was the LP1 drugs. If he's going to get rid of that stuff, or vaccines, Moderna 52-week lows. So it's a very tough, emotional kind of a sell trade first today. Actually, all week. Like I said, this was really with Bitcoin one of the big stories this week, and gold miners, which we'll get to. So. No more, no conjecture here. Looking just at charts, you see the 200-day moving average there, smack dab at right about 95. I don't like this space for the next 1 to 2 weeks, just looking at the chart, but my area was around 93, 94. So that's not great news, because that's still under the 200-day moving average. That's quite a bit of weakness, which is surprising for something that just hit 52-week highs 4 days ago. So we'll see what happens here. The 200-day is rising. It's 94, 92. Call it 95 here. We'll see if it gets to there, next week. But this group has been absolutely slaughtered from 105 to 92 in just 4 days. So if you're holding a biotech this week, I know you're in pain for the most part. I'll say you were in pain. Okay, the next big mover down here, this was the Meta Google Fund, XLC. This typically does not move in such a fashion, but look at this chart. Just a runaway train, not one day this entire year that closed under the 200-day moving average. Definitely a space you want to be a part of. We were talking about this thing just basically printing money. Hit an all-time high yesterday at, I'm going to round and call it $98. A quick descent today, down 2%, which is a multiple standard deviation move lower for it. Similar to what I said about the market, my full target for this was about $96. It surpassed that, got to 98. Trees don't go to the sky. And I see this pulling back to about 94. Like we said, this group and markets in general are crazy groups. Sometimes you could have a 2-week mean reversion happen in 1 day. Sometimes it bleeds out, whatever, what have you. This is a higher volatility area. Meta has been nothing but a runaway train. So now you had a significant move. The 21-day ATR, average true range on this, is $1. And today it moved 194. Hence why we're talking about it, because it is a multiple sigma mover. So XLC, as I said, don't love this space for the next 2-3 weeks, but I see it basing right around 94 with ultimate downside to about 90. And I think that's your risk reward. I do not see this 200-day moving average 85 being in limbo at all. There's also a little bit, and we'll talk about it soon, with the money moving out of semiconductors going into more software and areas like that. And Meta Google has been doing quite well, namely especially Meta. Okay, then let's look at the big daddy of it all, the Qs. This was where a lot of the pain was, of course, down 2.4%, a major move for the Qs. We always look at SPY, but Qs obviously super, super important and a great, great investment over time if you're lazy, and you don't want exposure to banks, buy Qs. I like to buy XLG. So my target for Qs here was 515. Again, what happened on the 11th? 516 we got to, and then pulled back very quickly to the 50-day moving average in just 4 days time. Now what? Don't love this space for the next 2 to 3 week time frame. We'll see what happens in a day or two. But in terms of the next 2-3 weeks, I think you're getting a little bit of consolidation. We got a little bit too hot, too fast from the election. So you're going to see pullbacks in a lot of areas, I believe. Today, probably the beginning, potentially. So the area for this is right around 500. I like it here. Like I said, I bought XLG, which is very, very similar allocation to this. So I bought that this morning. So I was very happy with the purchase there. So this, I think personally, a good area. Well, let's see. So here, the 21-day exponential moving average is 500. Nice round number. We're 1% or roughly less than 1% below from that. If things get ugly, you could go down to 480, 483, right around that area. So we're kind of in the middle here. But like I said, over the next 2 to 3 weeks, I don't think this is going to drift higher. I think it goes a little bit lower after the pretty monster run it's had since Halloween. All righty. If you have a ticker or something you want to put in the chat, put it in. A lot of stuff moved today. So I'll take a look and tell you, what it looks like for the next week, 2 weeks. Looks like crapola, looks wonderful, etc. All right. Best or top 3 gainers of the past 5 days. No repeating charts, but I will talk about it maybe a little bit to just emphasize. So IBIT, the best gainer this week, dancing to the beat of its own drum. Someone didn't tell Bitcoin that the market was having a big correction today. Bitcoin up 18.5% in the past 5 days. So absolutely crushing it this entire week for an average of almost 3-4% a day. So IBIT. I already pulled up the chart. I think it's a little bit overdone. I wouldn't be surprised if you get a monster kind of a pullback. For poo and giggles, I'll pull up the Bitcoin chart itself. Like I said, just to show you just how much it's done. I mean, this is insane. I believe in breakouts, and that was a very monster, powerful breakout at 73,000 here that we got the day after the election. He's the Bitcoin president, and this is just, stair step, and look at this. Boom, boom, boom. So it's done a lot. I would not be surprised. And I was talking about this, I think, the other day. The next pullback over the next 2 to 3 weeks, I think, takes you to about 75 to 80K. And of course, that is higher than the previous 52-week high. So I think the train has sort of left the station on this one, in that I don't think you're going to get those levels of 50, 55K. I think that's gone, especially because I think that we are going to have bullishness throughout different industry sectors, through the inauguration. So this is only going to go a little bit higher. So I think these were your, 3 chances to buy Bitcoin technically on sale. The Japan Nikkei crash on August 5th, the week of, basically after Labor Day when it was 52K. And then you had a little bit right here, the October 11th when the missiles were going off in the Middle East. It pierced as low as 60K. And then you had that breakout the day after the election over 73K. And now here we are, 91, basically 400. And the new all-time high is 93,300. So love it. Obviously, overall, you have to be in this asset. Don't love it for the next 2 to 3 weeks. So get involved and, participate when you choose a level. Definitely going to be watching this trade, see how this trades this weekend. Going to be interesting. Second best gainer of the past 5 days. It's an absolute piece of crap. It's our friend Nat Gas. So up 7%. Today was up 1.6. Again, these are the biggest movers of the week. So you have in the stratosphere, Bitcoin up 19%. And then here you have this piece of crap up 7% in Nat Gas. Let's take a look at the chart. Yep, there's rotation into some other assets that haven't performed well. I get it. This is not, like stale 52-week lows. This has just been happening 2 weeks ago. This thing hit 1235. All that being said, I would love if you got a tag of the 200 moving average at 1556. That would be a crash dummies. I don't want to give irresponsible advice, but I would irresponsibly sell the crap out of it since it's garbage. All that being said, I like this around 13.5. I think it easily does that. It's at 1338. The reason why I picked 13.5 is that it's the 21-day exponential moving average. So there's going to be some kind of resistance there. You need a little bit of sentiment change to get it above that. And ultimately, if you get, crazy exuberance, animal spirits, maybe a bad production number or a bad supply number, something like that, I think it can get to 14.5. So that's another $1.10 or so from here. So we'll say that'd be, almost like 8% or something like that. So not going to personally buy it. I still like utilities. Is the one I have on my sheet here for the next 2 weeks to potentially protect us from a down move. But Nat Gas, I think, goes higher for the next week or so. All right, we're moving along here. These end of week shows are always, a lot of stuff. All right, and the third biggest gainer tells me that the bullishness is, a little bit fading. It's volatility. Volatility is up 5%. So you have Bitcoin up 18%, Nat Gas up about 7%, and then volatility up 5%. So top 3 loser the past 5 days. We're already talking about a little bit of it. Biotech, the biggest loser this week. So the RFK thing absolutely just cracked it, down 12%. So it got hit pretty significantly. Next one, right behind that, the gold miners. Okay, so the gold miners, not a great place to be this week, down 9%. I am in this. The December calls. I thought this would base, I'm going to be really frank with you. I thought this would base around 37.5. The 200-day moving average is 35.22. I thought it was going to base right around here where my cursor is. I thought those levels were going to hold. These, that was from 2 weeks ago, and then early October. I thought this 37.5 level was going to hold. It has gone straight through. Today was lower again by about 60 bips. This 200-day moving average is your meaningful support, and that is 35.22, as I said. We have not closed under the 200-day moving average since March 20th. I think it is reliable. Got nose, on the nose here on November 14th yesterday, and also looked here to registering oversold conditions. So not typically what you want to see out of out of something that you are invested in, and something that struck 52-week highs just 3 weeks ago. All that being said, I still do believe in this. It's taken a little bit more time than I expected, but I do think this heads towards 39 in the next, maybe, like I said, it's taking a little more longer time on the downside, so I think it'll take more longer time on the upside. I think this will be, at $39 in about 2 to 3 weeks. Let's say this could also be not a bad hedge to protect you from, downward moves in the market if SPY does reverse. And again, I'm already in GDX. Otherwise, I would potentially recommend this because that is pretty reliable support, I think, right down there. All righty. And then what is next? Oh, of course, the SOX Semiconductors ETF down 8.7%. We'll call it 8.5 to 9%. Got hit very hard this week. We've been talking about it. I thought this group was going to do a little bit better, but it just hit a wall here. Look at this treachery it's got with its 200-day moving average still rising, but it's in a precarious situation. I believe in this story. Very cyclical, very important for your 401k and everything else. Very important. You want this group to break out. Again, the highs are in July. Bitcoin based for about 8 months. Sometimes it takes a long time to rotate back into leaders, into strength. I'm okay with this. NVIDIA reports on Wednesday. We'll see. I don't think that's going to be a massive catalyst. All that being said, I like the, if you're getting long in here, I said I bought XLG, which is heavy, NVIDIA, Apple, and Microsoft. So I'm obviously exposed to this. I like the risk here to the downside. I mean, in terms of that, I thought the downside of 213 was marked. So again, 191, you have higher lows here, 205. And then what happened here today is concerning, I do want to say, because it is a leader and the lows from Halloween have been broken at 218, and then you put in a lower low. So typically not what you want to see. And it's just going to have to do, chop wood, carry water to get to that 200-day moving average of 226.5. So ultimately, risk reward here, I think 213. I think it pops to that pretty quickly because folks are very quick to buy the dips in this group. And then if you're patient in about 2 to 3 weeks, I think that's about 225. But again, if animal spirits come in and really take over this thing, my target's about 240. It will be multi-month highs, and yet the all-time highs are still back here. So it's not the group that has massive momentum. You're going to need a different kind of a thrust in months and months time to get through those July highs. And then you'll see really Nasdaq and then the SPYs really catapult. And seasonality is really supportive of us being pretty much on fire through mid-January, which is, in line with the inauguration. All right. So we did the top 3 losers of the past 5 days. Yes. XBI down 12, GDX down 9, and then the semiconductors down 8.5%. So top 3 absolute trades of the past 5 days. If you absolutely Freddie Freeman this week out of the park. If you were long IBIT, 18%. If you were short XBI, down 12. And you were short GDX, down 9. You absolutely crushed it this week. I'm long IBIT, so that was really nice. I'm long a biotech, so that was not so nice, but it's in stock, so not a super leverage, but it is a big position. And then short gold miners, I'm long gold miners, so that sucked, but the risk reward is not so terrible anymore, as I'm pretty much, it's 5 weeks out, so I'm just long thinking at this point. Now, one of the best parts I like to do, top 3 absolute trades of the past 52 weeks. So if you could do math, that is the best performing trades in the ETF space from November 15th, 2023 through today. I like it better than year to date. It's more of a look back. You can't go wrong. Best performing market in the entire space. I will look it up just to give this this thing cred. GBTC up 143% year over year. You have to be in Bitcoin through some avenue, whether it be GBTC, in a wallet if you want to be complicated like that, or IBIT or GBTC, or there's many iShare that you can pick one. IBIT's the best one in terms of tracking, in terms of low expense fees and everything else. But GBTC, this also came out a year ago or more than a year ago. IBIT has less history since it came out in January. So anyway, all-time highs for this thing just 2 days ago, obviously, $74. Just be prepared for a pullback because it has done a lot of work. I think this goes to like 63, which would be a heavy reduction. So just be prepared. It's going to be equal to that about 75-ish K level in Bitcoin. So we'll see. But this is the best performer over the past year. You have to be involved. Next, the second best performer, and it might be surprising, maybe not. We've been talking about it. It's the banks. Trump is going to deregulate the banks. I'm not going to say they're going to go hog wild, but it's going to be a looser environment. which will grow hiring. They can refi, they can give out loans for less and make more on it in terms of margins. And trading desks are obviously doing more profitably through all-time highs for the most part. So this group, the KBE, looks absolutely great. I'm long it in my prop portfolio. Similar to the market, though, in terms of short term, my target for this, it's fully realized, essentially. My target was about $60, and it got to 62 on the 11th. So again, trees don't grow to the sky. I say that really a lot. I was considering changing the name of the program. But yeah, this group looks like it's going to pull back to about 57 over the next 2 to 3 weeks, and that would be your entry. This is not a winner like my Birds last night, who crushed the Commanders last night. Awesome game. I lost my whole train of thought. So anyways, the 21-day exponential moving average on here is 57. This is a leader, not a flavor of the month of just a quarter. This has been crushing it since last year, and this is forward looking for the administration. I think you have to be in banks, even if the Fed does cut only 2 times next year, which is probably looking like what it's going to be, including next month. It's like 50-50 shot. I think it's 60-40 actually. 60, they do cut 25 pips. And then ultimately, if the sell-off gets really ugly, I think it takes you to like 53. And if you get that opportunity, I would pounce on it. So those are your levels for that. Second best trade of the year, up 50%. And it's interesting because it is a tie. It's just literally 1% ahead of the old leader, the semiconductors. That's a great rotation mix. You have Bitcoin up 143%, and then the banks up 50, and then basically I'm a math nerd, so every percent counts. So the semis are a tad behind at 49%. We looked at this through the SOX. It's basically the same ETF, different constituency and weighting, but don't love this group right now. It hasn't done a ton since July. This looks a little bit better than the last one in terms of how many tests it had from the 200-day moving average. I like the support on this around 237. That is a 200-day moving average is 236. I like that. And then if things get nuts, I think this heads to 265, which again would be multi-month highs. But again, not taking out its overall all-time high. This could possibly, not break its new highs till spring. It's fine. You still want to be in this group. Bitcoin, banks, semiconductors, buy them. Have a good weekend. Touch grass. I think that's what people say, but it's cold here or whatever. Peace, y'all. Talk to you we'll do it Monday, I think.